Welcome everyone. I'd like to welcome you to the Hurley Investments midweek commentary. I enjoy doing this little quote here and there only because this one is so applicable to what I'm going to go over this week. I'm dating myself. Hannibal Smith, the A-Team. I love it when a plan comes together. How do I say this? When a plan comes together, what part of that plan matters most? When your plan comes together, what part of that plan matters most? And if I've got you lost, just type a couple question marks in. But when you got a plan, what part of the plan matters most? Abraham, everyone has a plan till they get punched in the mouth. Mike Tyson. I love it. The result, there you go, George. The end of the plan. The end of the plan is what matters most. With that said, I'm going to tell you a couple different plans here. One plan was dinner with the Seitz family over the weekend. Now, to give you a heads up, we've known them for forever. We love the Seitz. I guess the best answer, the Seitz are, the wife is a sister almost to my wife, and in all honesty, they just have become about the best friends we have since we moved out here. Really good group of people. We have kids that are the same age. They've got 3 kids. I've got 6 kids. A little bit different, but the short answer is we have a lot in common. We have a whole lot in common. And over dinner, their oldest had her birthday, and I got to sit down and talk to Dave. Out of curiosity, has anyone here been with a professional brokerage house to have money managed? Has anyone here been with a professional brokerage house to have money managed? Okay, I see on my other feet I got a couple people. Of course. So, what do they use? What do, and I'm going to put this in quotes, professional money managers use for a trading instrument? The magic 8 bulb. What do you mean by that? Guessing. Okay, the crystal ball. I understand where you're going. Guessing. We're going to say crystal ball. Back testing, which is stupid. Back testing when you already know what the answer is going to be. It just makes no sense. I don't understand. In fact, I'm going to go so far as to say the one thing that we have not mentioned here, which is probably the most important, asset allocation model based on historical averages. Which means, plain and simple, and it's not so plain and it's not so simple, which means their portfolio management ended when they put you into the fund. Don't worry. You're in for the long haul. Let's see. Abraham, I'm going to really enjoy what you're going to say here, I'm pretty sure. Abraham says, in the past, when I discovered they were not able to save themselves when crisis came, so I decided if I will lose money, it'll be my own responsibility. Love it. George, heard that before. Oh, you hear it all the time. It's absolutely, it becomes heart-wrenching, but it's bothersome to hear. It's really bothersome to hear. Their job ended when they put you in the fund. When they put you in the asset allocation model, their job was over. They properly diversified your money. They put it in this historical average, back-tested scenario, and they got you, again, a historical average. The problem is, what's wrong with a historical average? Problem is, so I'll put the problem, what's wrong with historical averages? They're part of the past. I don't know if that's a problem per se, but I tell you, it doesn't help out. I see not necessarily of the future. Things are different now with all the manipulation. I'd agree with all of that. But here's the point, even though you all are technically right, you all are also technically wrong. Do markets move on the historical average? Do markets every year go up 7.75%? They average that, but can I play a little average with you? If a stock goes up 50% and down 50%, someone tell me, what is the historical average return on that stock? Zero. There you go. It's just an average. A stock, and I'm going to put it this way, a $1 stock goes up 50%, and down 50% equals a 0% historical average. And you sit there and you go, well, duh, Kevin, what are you trying to tell me? How much is the dollar worth? Your historical average is a 0% return. And you are down. What's a 25% historical average return on a dollar? Well, $1 goes up 75%. And just doing some simple math here, and George, thank you for having that for me. You're going to save me a calculation. $1 times 1.75, it's worth $1.75. And then loses 50% for a 25% historical average gain is equal to 1.75 divided by 0.5. Actually, you multiply it 0.50. And I'm sorry, I get 87.5 cents. Well, what if it lost? Let's change this around. What if it lost 75% first? Excuse me, if it lost 50% first? Let's just do the math. $1 is equal to 50 cents times a 75% gain. So it's times itself plus the 75. Pretty amazing. Oh my gosh, it equals exactly the same thing. On a historical average of 25%. Thank you, George. George says, well, if you lost 25% and then gained 25%, George, that's still a zero average. I want to show a gain, a historical average gain, a 25% historical average return on $1. For the most part, has still been a loss for individuals. As I sat there and I talked to Dave and the Seitz family, it was shocking to hear how Morgan Stanley did last year, well-diversified blue chip funds. Market was down. 0.5%. How did Morgan Stanley do? How'd they do? Take a guess. Shoot a guess at me. How do you think Morgan Stanley did last year? Negative 9.23%. George, close. Close. Right out of the horse's mouth. Any other ideas? Anyone else want to take a guess? Down 14.9%. Now, if you back out the 3%, roughly a 3% bond fund loss and a 2% currency loss and a 0.5% S&P 500 loss, how much are fees? Any ideas? Any ideas? $14.9 minus the fund fees and this fees and that fees. If I do my math, and correct me if I'm wrong, I'm pretty sure the fees would come out to something like 9.4%. Or there's historical average trading fund that matches the S&P 500 outperform the market by something like 9.4%. As he went through and said, you know what, Kevin, I've really got a problem here. I am nowhere close to my plan number from when I want to retire. And all I could politely say is, yep, you're nowhere close. Won't make it. And it was a shocking realization. And I said, I've talked with you for years. You've known what I've done for years. And he said, yeah, well, when I spoke with you, Kevin, you were having a hard time on it. The go was there. And I said, yeah, but why not get something while you wait, or as stocks fall down, instead of worry with a little heartache. Why not pick up shares or lower cost basis, or be able to sleep at night? Blew me away. I don't understand. So I'm giving you the perspective of a money manager. It's not something you guys should ever be reaching out to be that type of person. It's not there. It's not there. Now, Dave was kind enough to say to me, hey, you know, Kevin, I would have used this some years ago, but plain and simply put, he goes, you were kind of blowing chunks. And the comment we made earlier was, when is your plan most important? The plan is most important at the end. But you've got to have a plan that makes sense. Taking a quick look at these historical averages, I'm giving you why there's no asset allocation that works, ever, whether they're Morningstar rated or not. It's not available, it's not there. It's just not there. Now, I'm going to share my second comment. I had a great conversation with someone during the week. I had a not so great conversation during the week. We started to protect last week. So before I go there, let's look at some charts. We started to protect when the Dow looked like it was going to be overbought again, really close to overbought now. It fell down. In 2 days it came back up. Nice V-shaped pattern. Obviously not doing too bad, right? And then if we pull up a little bit lower, we actually got technical crossovers on the MACD. We don't have it on a 5 or 20. We do have a spread, almost a 900-point spread from the 200-day simple moving average, and we literally have a 1,000-point spread between the 50-day simple moving average. We want to see those crosses. We want to see the golden cross, what big money looks at, where historically you're supposed to have that 8% return in the next 3 months. But looking at a chart on the Dow, we have mixed signals, uncertain, uncertainty, I'm not saying that right, and close to an overbought indicator on the RSI. It shows uncertainty. A lot of people might say, well, Kevin, you dummy, go take a look at a Bollinger Band. Well, I'm going to bite my tongue for a second. Let's verify what we see on the S&P 500. Ditto. Everything is exactly the same. So I'm going to go ahead and grab this. We don't have a whole lot of divergence. These two seem to mirror each other until they don't, which is rather interesting. When they don't, it's normally one big S&P 500, excuse me, one big Dow component where something has changed. And then we look at the NASDAQ, which is the chart that I like. But we're mixed. Technically bearish. Good bounce off of the 200-day, but we are technically 10% extended over the 50-day. It is a stretched or extended market. The one point that I did like that we talked about last week, we're still a bit off of our RSI. So we're also mixed signals here as well. Reason why I pointed this out is because I had someone come up to me as well and say, Kevin, you screwed up. And there are times that I screw up. An example, well, we took our protection off of Disney because anytime you make the most expensive movie in the world, take a protection off at 115, drops down to 105 before you stick, 105 protection back on. Yes, there are times I screwed up. But the comments that were made to me last week, and if you go back and look at the charts, last week when things started to fall, all three charts will show you exactly the same thing. We put some protection on. Went way out in time. For most of my guys, we have old protection that was put on at 185 in June. We have September calls. I like the position because if you take a peek at it, paid $12.60, had half of it paid for, and I've got all the way out to June to adjust, to short against it, to do what I need to do. I'm protected in the sell in May, go away. I'm protected for the April 26th, 27th FOMC meeting for the rate hike. I'm protected in June's rate hike. And the comment to me was made, you put it on too early. Well, yes and no. I'm not trying to make up every penny on the way up, but it has cost us about $5 of the $9 up, but we're protected. Why is it important? Well, this is the China week. You're an idiot to let it all ride, and pardon my language and pardon my brashness. You're an idiot if you let it all ride when you have China GDP's retail sales numbers and industrial production all coming on the same day. You can't trust the Chinese that much. Not a smart idea. Kevin, you protected Disney down at 97. Well, it can't really seem to break 100 yet. Waiting for the catalyst, hoping that'll be earnings. Kevin, you misprotected. You didn't protect Disney up at the highs where it's at today, where it wasn't at 3 days ago. And I had to sit there and control my temper. Yes, I wanted to rip the person's head off. But again, it's because they're looking at a single moment in time. And that's okay. You look at any single moment in time, you can prove whatever you want to. What matters most is the end of your journey. The end of your plan. You love when a plan comes together at the end. Could I have done a better job on managing Disney on the way down? Definitely, I could have. I did make some money on the way down. For some people, we added extra shares. I made enough to 100%, 1,000 shares of Disney, boom. We added another 100 shares pretty easy. Some people got 200 shares. Some people, I took some of the profits and I took some extra money and we added some shares that were paid for, some shares that they traditionally dollar cost average. No reason why Disney, with Shanghai Disney being sold out the first 10 days, Carnival Cruise when they had their earnings saying they lost out to the more family cruise ships over the last quarter, which is Disney. Zootopia came out. We still have Star Wars. There's no reason why they can't beat their earnings again. Kevin, are you married to a stock? I hope not. But fundamentally, other than Apple, you can't find a better stock with upside potential and growth. No reason why the stock couldn't go right back up to 122 again. As you go through, I found it kind of happening all together. NVIDIA, I'm going to protect with some out of the money, $35 long puts. I've got plenty of short call credit to use where I can let NVIDIA run a little bit more, and then I'm going to choose to protect with some out of the money. Visa. Kevin, you idiot. You were cheap. You paid only $2.50 when you could have paid $3.85 to protect Disney or Visa at $77.50. And again, I wanted to rip the guy's head off. I'll be honest with you, it ticks me off. It's all I could do, not just to sit there and strangle him to death sometimes, right? I've got a cost basis of $51.59 and a true cost basis for a lot of people closer to $35 a share. And I'm protecting that money at $77.50. The stock was literally trading at $78.40. So I had 90 cents to the downside or 160 cents I could protect to the upside. I chose to go cheap on Disney. The big $1 million question, why? Kevin, why would you go cheap on Disney? Not Disney, Visa, excuse me. I'm talking about Visa here. And it's the same thing I showed you last week. Went to the consumer credit report, looked at the last 3 months. Consumer credit has increased significantly over the last 3 months. And we know where credit really hasn't increased significantly. You got it, American Express. Which means consumer credit has done really well in the Visa, Discover Card, MasterCard, Citigroup, Capital One. Some of these other ones have taken over from the horrible numbers that you see coming from American Express. Where do you go to check that type of credit? Well, I went, I thought I showed you last week, Abraham. I go out to briefing.com. And last week when the report came out, I got really excited. I go to their calendars. This is all free. There's so much information out there, you probably don't need to spend money ever again. And it expired. It's off here, but I know the next one happens in May 6th. So it should be in this week right here. And you go to consumer credit. Last one. And you have growth patterns year over year. You have monthly changes in the billions. Really interesting information that's level one, basics, right? Fundamentals that apply to the stocks you're going to trade. It's me just putting two and two pieces together. Guys, where I'm going at with this is when your plan is not flawed, when there's not a hole in what you're doing, what matters most is at the end of your plan. It doesn't mean that during your process it doesn't cause you some heartburn. But again, if you're protected and you understand your plan, you're looking really good. Guys, out of curiosity, what's happening this week and why? What's happening this week and why? Let's get you guys thinking. What's happening this week and why? Anything, guys? What's happening this week and why? Did I catch you by surprise here? Biggest one, Treasury budget was supposed to come down only negative 52.9 billion, minus 108.0 billion dollars. We had export, which was up 0.3 versus an estimated supposed to be down a negative 0.4. Imports were negative 0.1 versus an estimated negative 0.1. Today was the big moving day, right? New home loans up 10.0%. More people are buying houses. Core PPI, need to meet that inflation target, came down at negative 0.1 versus an estimated 0.2. That is a reason for the Fed to not raise interest rates. That's technically good news for us, right? If we take a look at regular PMI, negative 0.1 versus an estimated 0.3. Let's hear it for energy. Energy over the quarter still fell. Retail sales Bad retail sales, negative 0.3 versus an estimated 0.2. Doesn't make a whole lot of sense. Retail X transportation though, right? Let's see what we can read into it. Came in at a 0.2 versus an estimated 0.4. How do we read this? How do we understand this? Well, if you count in cars, people don't have a whole lot of money after Christmas and before they pay their taxes to go out and buy a new car. But are they still buying stuff without counting transportation? You better believe it. Not as much as we'd like, but consumer spending on retail sales up 0.2%. Rather weird one. Business inventories came in negative 0.1 versus an estimated negative 0.1. And I brain farted this one. I sat here and I said, man, business inventories, why is business inventories important? And when I forget one of my fundamental reports, I can go back and I can literally click on business inventories and refresh myself. You know why I forgot about it? It only has a merit of a C-. It's not important, relatively speaking. It's the overall three-stage process of manufacturing, wholesale, and retail. When all three are released, two other opponents have already been reported. So it's not important. But for the life of me, I could not understand why I couldn't remember it. I always try to go back to briefing.com. It's the same information, but it's more guts. The reason why I go to briefing.com is because when I go to business inventories, they've got a section in there, guys, that reminds you what's the important part of it. The big picture. This is what you're looking at. The big picture. Yeah, it's kind of important to know key factors and so forth, but it's the big picture, if I can get that off my screen, that you're going to spend your time looking over, and that's going to tell you the most important. A decline in business inventories in February with January, with March now, hence to a lower GDP. It factors negatively in the computation of the first quarter GDP. So, plain and simple, 3 negative builds in business inventories means that the U.S. GDP is not going to be growing as fast as it has in previous years. Bingo, I got it. I remembered what I couldn't remember. I remembered my brain fart. Okay, this is why it's important, but it's backward testing. This week, will our market end this week? I'm going to plain and simply say lower. And it comes down to two reasons. Two reasons. Options expiration and the Middle East OPEC meeting. Where Iran wants to meet, and you're going to have basically people are going to say, cut oil, cut oil, cut oil. And of course, they can't afford to either. So off you go. It'll most likely be a buy the rumor, which we've had, and it'll be a sell the news starting on Friday and over into Monday. I still think April will end up 2.5%. Key earnings, this is very important. This is our bank earnings week. This is where we get the first of 2 solid weeks of bank earnings. When Alcoa reported on Monday, hopefully you guys took the time to build, I might as well put this at the start. Hopefully you built, when Alcoa reported, you built an earnings list on companies you trade. Don't wait for me to do it for you. Take these steps yourself. Apple reports on 4/25 after the market closes. Gotta keep my number locks. 4/25 after the market closes. Baidu 4/28 estimated. Alibaba is my birthday 5/5 estimated. We have a Disney 5/10 estimated. We have Ford, which is a 4/28 before the market opens. We have Facebook, which is 4/27 after the market closes. We have Netflix, 4/18 after the market closes. We have Nvidia way out to 5/5, my birthday, estimated. We have SanDisk, 4/27 after the market closes. We have Visa, 4/21 after the market closes. We have Verizon, a lot of bad news the past couple of days. 4/21 before the market opens. We have Home Depot, 5/17 before the market opens. And we have Zions Bank, last but not least, 4/25 after the market closes. Build yourself a earnings list so you don't get caught off guard. Get yourself ready to go. Know what's coming up. Don't be caught with your pants down. Economic reports, pretty important today and Friday. Internationally, our futures on Friday morning, 100% based on China. GDP, industrial production, retail sales. Big, 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 big. The EMU, European Monetary Union, has their HICP, that's their inflation numbers, will be horrible. Great Britain has their Bank of England announcement in minutes, shouldn't raise rates. So we're looking probably for a down open on Monday that will continue with options expiration, and over the weekend you'll have the Middle East OPEC meeting. Interesting to see. On Friday, you noticed I put the Baker Hughes rig count. Not only do options expire, but I'm starting to pay attention to rig counts to see how the speculation moves between different time periods. So just things to look at. Having to trade, I'm pretty much set for earnings. My biggest question for how I'm going to trade really comes down to I'm set for earnings, and my big question is, do I roll protection to a higher price? And that price is obviously called your strike price, right? Guys, I used a lot of your time up today. I want to open this up to questions. What questions do you guys have? Don't forget, you can always go to my blog sites. I've got some blogs I'm trying to get in, but obviously when I do a tax extension, I'm a little behind the 8 ball. What questions do you have, Ida? Let's go to Facebook. Let's find out. Facebook earnings. There you go. Facebook earnings investor calendar. I just saw the 27th. There you go, up right hand corner. Facebook earnings, Ida, 27th for Facebook. And you know what, Ida? You probably saw that on Yahoo. And when I see it on Yahoo and it doesn't match with Options House, or when I match Options House with Whisper earnings whispers, when I have two different dates, I always go to Investor Relations. This is where you find out the company will tell you, or should tell you, the most. Facebook Q1 2016, April 27th, 2016. You'll see that right there telling you when earnings is. So don't ever hate, don't ever worry, your best place to check is the company website itself on the Investors Relations. All right, guys, questions. What questions do you have for me? If any at all. Dave, haven't seen you for a while. Guys, we have David Boyd with us today. He is a very good friend of mine. Nice to have you back, Dave. And glad to see him here. Dave is a local neighbor of mine, and he's really increasing his understanding of trading. Guys, do me a favor. Welcome Dave, just because I can. Let's give Dave a big welcome to being here and to being in the program. Dave, I've got my Hurley Investments group that says, I've got someone that says clap, clap. Dave, way to go. Good choice, Dave. Dave, you got to love Kevin, brown noser. Hopefully you're calling me the brown noser, not Dave the brown noser. Thanks, Lance. All right, guys. Hey, any other questions you guys have? I'm turning the time over to you. Any questions, concerns? Lance, you suck. Lance makes a quick comment. Kevin, when you make a mistake, how does that affect your trading? Okay, so I made the comment before. I didn't understand how Disney would not make great numbers for the quarter with Star Wars. And boy, it's like the day I took off our protection, the stock was bullish. I can technically justify what I was doing. Damn it if that stock didn't lose 10%. And down it went. And I didn't react quick enough. I made a mistake. What does that mean? It means on some portion on the way down, Lance, I'm not making up as much money as I could. Now, again, as I told you, I can justify it. I can 100% justify it based on technicals. The mistake was that it didn't go the way it was supposed to. Well, Kevin, 10%, yeah, it lost like $7 in a day. And I was right about Disney. And I was right. I missed their earnings by a penny. I called their earnings to the penny. Both bottom line and top line. And they still went down. The mistake is in the stock market is sometimes stupid. It's kind of like people, right? Y'all got that stupid friend, that stupid neighbor, that stupid person. You just sit there and you scratch your head and you go, I can't believe they're doing what they're doing. George said the force is not with you. And Lance, I appreciate that. Lance says, yes, I look at a chart. I can see why you made your decision. So, the market has it wrong right now, which means it's a buying opportunity, which means you guys always wonder, why, Kevin, do you sometimes hold 10% or more in cash reserves? It's for a buying opportunity. There are some people that are trading with an amount of money that does not allow you to start off with really 500 shares or more. You're starting off with that 300 shares or more. To truly add 100% more shares of stock with 300 shares, the stock has to fall 35%. Most stocks don't fall 35%, so they have to drop 10, 15, 20% 2 or 3 times in a row till you'll have money to truly purchase on new 100 shares outright. Or, like what I did, I missed some of the downward movement. That doesn't mean I missed all the downward movement. I made up some of the downward movement pretty well. But that's why we're always going to tell you it's never a bad thing to have about 10% cash reserves. You truly never have to be 100% vested. Give yourself some money to have a buying opportunity, to buy a second set of insurance or long puts. How'd I do so well in 2008? I had extra money. As stocks were dropping through support levels, I just kept adding more protection, more insurance contracts, one after the other, and boom, we looked really good. So Lance, part of it is my ego, part of it is my arrogance, part of it is how stupid the stock market is. Technically speaking, I didn't do anything wrong. But technically speaking, if I could have waited one more day, I wouldn't have made the same decision. I made the best decision I could have with the information that was before me, and it just turned out to be wrong because the stock market's stupid. Hope that answers your question. On the flip side, I've nailed Baidu. Boy, I didn't quite nail the bottom at 136, but at 141, we picked up more shares of stock. The thing's trading at 190 today, 194. Nailed that one, added shares $53 ago. Over 25% of the value, we added more shares, 100% paid for. It's in the process, or in your plan, and what matters most about your plan is how it ends. Thanks, Lance. Okay. Any other questions? Going once, going twice, sold. Should we call it a day? I will get this posted tonight. It'll be on one of those blog sites or what have you. I've got a couple other things I want to post. I've got my guy out in Mississippi that's doing a really good job of writing some really good articles that the Securities and Exchange Commission will take into consideration. Abraham asked, any opinion on the Fed? No raising hikes. And the reason why, if you take a look at their inflation, they're not hitting their inflation targets, and that's all they need. So PPIs kind of prove that today. And when they're not hitting them, they're missing them pretty significantly. They justified December's rate hike, even though it caused a bit of a crash in the stock market. They justified the rate hike based on inflation picking up, but PPI down 0.1. They're off by 0.3% and 0.4%. CPI comes out on Thursday. If we see the same numbers on CPI where inflation is negative, there's the reason that they're not going to raise interest rates, at least in April. I would look to an interest rate hike closer to June and December for this year. It's an opinion, only an opinion. Lance, why do I like Dave so much? Is he a relative? Dave is close to being a relative. Dave is a fishing buddy. So when Dave is a fishing buddy, in my book, that's as close to being a relative, Lance. George, birthday is May 2nd. There you go, George. George, I've got my birthday May 5th. I've got my little daughter's birthday is the 21st. My oldest son is the 28th. A lot of May birthdays in my family. In fact, in a 30-day period, we knock out 4 of the 8 birthdays for my family here. If I want to count my mother, you can count 5 of the 8 birthdays where I actually got to get something, so to speak. All right, guys. Hey, if there's no other questions, let's call it a night. Look for this to be posted with a recording. If you go to any of my blog sites, if you've missed some previous weeks, you'll find those recordings there. I've got them all on a YouTube, unlisted, I think, recording, so you just click on the link and we're good to go. Guys, have a wonderful evening. Look tomorrow morning, really is probably the best way to find the links. Look tomorrow morning. I appreciate the time with you guys, and guys, you have a great night. I'll talk to you soon. Bye-bye.